Hi stock investors, JJ here. Welcome back. Well, more Nvidia news. It's rebounded actually this last session. Just to keep context on this, it's up 6.76% just in this past one trading day. And of course, during the year to date, it's up nearly 162%. So we keep that in mind as we listen to this. Nvidia rebounds after sell off, and the euphoria for Nvidia could drive the market cap to $6 trillion. Could we see that? It's just past $3 trillion and added $1 trillion of market cap just in the last few weeks. So this is EMJ's Capital, Eric Jackson. So let's see what Eric Jackson has to say about the $6 trillion market cap.
I'm looking at the notes here. Well, I'm good. I'm not as good as you think Nvidia is going to be, though. I mean, these are not typos. You think it's going to head close to 70 times PE before the end of the year, and it's going to hit $6 trillion in market cap? 70
PE wouldn't be out of the realms of possibility if it, went up. We've seen tech stocks do that in the past for sure, get up to that in exuberant times.
At $250 a share?
And also companies like Amazon, which have got there to that PE quite frequently over the years.
I think so. By the end of the year, as people start to look forward to what they're going to do in 2025. Yeah, like I know you talk all the time, Scott, to people like Stacy Raskin, who says, this stock is still cheap. And yet nobody seems to believe it. But here are the numbers. Over the last 5 years, Nvidia's average look forward price earnings multiple has been 40 times. Yesterday, after this 2-day correction, it was 39 times forward price earnings.
After the correction, which was for about 15%, could it go? It could be exuberant. People are calling for, like Dan Ives and Tom Lee, is sort of what the projections that they have for it imply that there's going to be an AI related bubble, over the next 3 to 5 years, and with other tech being taken along with it. What do you think about that? Let me know in the comments.
But there have been 3 times in the last 5 years where it's had a look forward price earnings multiple of over 50x, and 2 times in the last 5 years where it's gotten just about to 70x and then it pulled back. So it's
also gone down 50% at times. Not that long ago. Are we forgetting that?
We just haven't seen that euphoria yet.
It didn't just pull back at those times. It got destroyed.
It did.
It got destroyed, yes, a couple of those times. So, this is a high flyer, and expectations can reset on a bad earnings report, but they can also get equally overhyped on good news. And
that's the thing. Volatility, it's a roller coaster ride. A lot of these stocks, a lot of sort of momentum. When there's momentum there, they can be a roller coaster to upside and downside. And traditionally, people would like to go with momentum if they're short term, or even longer term if they intend to be long term, and they sell when it goes down, being scared out of it.
Despite the fact that stocks had an enormous run, it's the euphoria hasn't yet caught up in terms of the go forward multiple. I think what's going to happen in the second half of this year, as people start to see how well the Blackwell chips are selling, how good the gross margins are on those, and start thinking about what's to come with the Rubin chips around the corner, their next generation after that. I think
so the stock market is forward-looking, thinking ahead, and they've made a big show of what's coming in Nvidia. It does look very good, and they've got a lead, and it takes a long time for other companies to catch up. But eventually, with those big profits, he mentioned those massive gross margins, other companies will want to get in on that. That's capitalism.
We'll start to see that euphoria reflected in a lofty go forward price earnings multiple, and if that happens, this thing could go to $6 trillion market cap.
You don't think they're over-earning at all right now, just based on the flood of orders? They're kind of the only game in town.
There has been talk of, other videos I've said, other people have mentioned this, that it is has been cyclical industry in the past. So those earnings can go down very quickly when things turn. But is it different this time?
Well, they're selling to these big hyperscalers. But think about it. Who are they going to sell to? They can't make enough of these chips to sell to everybody on the planet. So they got to prioritize. Why wouldn't you prioritize to these hyperscalers who are putting in orders, as large as they possibly can to lock up as many of these chips that they can currently get their hands on, the H100s, H200s. And so that's supposed to be a bad thing. That's supposed to be a sign that it's overly concentrated to these folks.
Well, it's not a bad thing.
I don't think so.
It is what it is. But I mean, you have to extrapolate what you think the future is going to look like based on everything that you just said right now. I mean, there are other competitors out there who are going to be making chips and selling them to potentially the hyperscalers too, and other players.
I'm sure those companies, those big companies, would like to have some, cheaper and more inexpensive products from other companies too. That's capitalism, and why would they want to pay more than they have to for what they need to scale AI
as well. Granted, Nvidia has the whole football field to itself, so it can go up and down the field unabated. There's no defense, but eventually there might be some defense on that field.
Years down the road. So they've got to use your analogy, Scott, they've got 80 yards of clear turf in front of them to
They do, but the market is seeing that. This might be a good time to say he's definitely thinking that there's a lot of runway here and it's going to happen. I'm not recommending one way or the other. Don't give investment advice. You need to seek your own advice and do your own work. This is just for general entertainment and general education purposes. You need to seek your own advice. Anyway, let's see what this very bullish analyst has to say to finish off.
To keep running towards the touchdown. Nobody's catching up to them. There's just a bunch of lazy linebackers behind them. So I think it's years away from that happening. They're gonna take advantage of that lead that they have, and it's not expensive. Coatue had an earnings slide recently that talked about how this is not Cisco in the .com era. Back then, Cisco's go forward PE multiple got to a peak of something like 136x. Again, we're below the mean for the last 5 years. So even though the stock has done so well, it is still relatively cheap compared to where.
Well, it depends if it's how cyclical it is, if it kind of normalizes, if we're in the peak of a cycle or close to the peak of a cycle, or whether it's going to go on for years yet, we just don't know. So interesting thoughts one way or the other. I've done videos for bullish and bearish. One value investor analyst said on a previous video that it's because there's so much consensus. There's a worry here that there's so much consensus. 90% of analysts have got a buy rating on Nvidia still. So what do you think? Let me know in the comments, and do subscribe to this channel. It's a new channel to give it some love for the algorithm to find it. That would be great. And on screen, I'm going to put a link to the video that YouTube thinks that you should watch next. So go and see that now if you want to. And thanks to everybody for watching, and I'll see you in the next one.